And good afternoon, good evening, wherever you're located on planet Earth. It's now time for the PulseWave Report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. Well, today is the day known as Hump Day, Wednesday. We're halfway through the work week. And this is when things start to accelerate. Today is also FOMC Day. We got the Federal Open Market Committee talking about interest rates and whatever their views are for the economy going forward. What else we got going on? Well, U.S. futures are pulling back ahead of Apple and Facebook earnings. Elon Musk says the SEC is sometimes too close to Wall Street hedge funds. The Tesla boss also said it's strange the regulator isn't clamping down more on some of these SPACs. Deutsche Bank posted its most profitable quarter since 2014. The German lender's net revenue for its investment banking arm rose 32%. You know what that means? That means that the laundromat is up and running and open for business. That's telling you they've cleaned more money than they ever have before. So props to the gangster chronicles of the banking industry, Deutsche Bank. Money laundering business seems to be doing very well. Bond King Jeff Gundlach thinks the Fed is ignoring the growing risk of runaway inflation. The billionaire believes U.S. stocks are overvalued and instead brought European stocks for the first time in years. If you've been to Europe, you've been to America. If you've been to America, you've been to Europe. They're cousins, man. The West is the West. Doesn't make a difference. You should know better than that. India's surging coronavirus cases shouldn't dissuade investors from buying emerging markets equities. This right here is a plug for the populace, the peasants, to prop up the equity markets. India's equity market is geared to global trends and long-term growth, according to Mark Halfel, the CIO of UBS Global Wealth Management. Of course, you got to talk your book. You're long India. You got a mad overexposure in India. India just finished reporting their largest increase in coronavirus cases ever in like a day. So, of course, you need to talk your book. I ain't mad at you. You want people to invest in India. You say, hey, don't forget about India, okay? We need help, too. We need a bailout, too. I get it. Earnings expected. Apple, Facebook, Boeing, Spotify, and Ford are the highlights. On the data docket, the Fed's interest rate decision, FOMC press conference, OPEC meeting, and MBA mortgage applications are due. I totally forgot about the OPEC joint. All right, that's important. The OPEC thing is important. That's mad important. Can't ignore that one. That's something that's going to have to be watched, and it is what it is. All right, we can't ignore that one. Food and energy, as I've been going over and explaining to you for some time now, is an issue. Okay, it is an issue. It's a problem. All right. Right now, you got crude oil flirting with $65 a barrel almost. All right. And you got, food on fire right now. The grain markets are literally on fire. Now, this morning, we are getting a pullback, though, in your grains. We'll get to that in a second. Let's see what else we got going on here. Goldman Sachs is taking a look at crypto-linked stocks that have skyrocketed alongside of Bitcoin. So, again, they were downplaying it and disrespecting it. Now they want to play in there and play catch up on all the stuff that they've missed. Just so you guys know, right now, they are in a rush to bring you some crypto ETFs. All right, that is in the works, even as I speak. So just be on the lookout for that as well. Now, as far as the equity market being overvalued, I wanted to go in and take a look at some charts and stuff, and I didn't get a chance to last night. Got caught up as I have been, because I've been in this lab plotting and planning and working on algos. So that takes up a big chunk of my time, big chunk of my day. So this is what we're going to do. Before we get into today's topic, because we do have a very interesting topic, I want to first make up for yesterday. So let's look at some charts. I'm sure you guys don't mind looking at a few charts now, do you? I'm going to hook you up. 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 So give me just a second. We're going to take a look at a couple of things. I know there were people that wanted to look at some things last night, and I just could not make it. Couldn't make it. Hold on one second. Where's that other chart? Okay. All right. So let's see. So Apple, Facebook, Boeing, Spotify, and Ford. Okay. All right. Let's see here. So Apple, Facebook, Spotify. Yep, I see that stock's been doing what it's doing. Let's see. And what was the other one? Should have known. Boeing. Okay. All right, Boeing. Let's see. Okay. All right, we're just gonna look at a couple of these real quick. And let me put this one up first. Spotify is on the New York Stock Exchange. Okay, got that one. Let's see. Here we go. That's what I was looking for. All right, I got it. So here's all right. All right. All right. Almost done. And that one. Okay. All right. I think we're ready now. Yeah, we're going to go ahead and kick this off. Let's look at a couple of things. I just want to show you how things are kind of like fanning out right now. All right. So let me share my screen with you. Let's pull up the first one. All right. Okay, here we go. All right. So the first chart is Spotify. Since we got earnings coming out, this is kind of where the market has been. This is what's going on, just to give you an idea. All right, we're going to take a look at the weekly, see how the week is panning out. All right, so if you look at the weekly here on the Spotify, you can see how things are going. And right now, the bulls are clearly in control of the market. Yes, we put in a short-term top, all right, a while ago, back at that 387.44 on February the 26th, the week of February the 26th. And since then, the market has just been kind of moving sideways to slightly higher off of these lows. And we got room to go. We got room to run. You don't really start hitting resistance, hitting that wall until you get to about $310, okay? So this market has a big hill to climb. It is in full-blown correction, has been in full-blown correction for about 2 months now, okay? So that has not changed. On the weekly chart, we've been in a full-blown correction. That has not changed. Short term right now, bulls have been in control for the last few weeks as the market's been bouncing off of the lows. but it's still in jeopardy. It could still roll over and fall over the edge here. That's very, very possible. But right now, the bulls have been kind of keeping it elevated. You can see that clearly on this weekly chart. Switch it over to the daily chart, and you'll see that we came into today with a crash alert ahead of the earnings, as the market is really struggling below the Kumo cloud. All right, the bottom of the Kumo cloud acting as a strong resistance point. Okay, so the last time we had this crash alert sell signal, we had a significant drop. All right, and this next one is threatening to put in a new leg down and take out the prior supports. You see that? The good news is that this is happening under a neutral market condition. All right, that's the good news. You don't have a powerful trend that's like, sucking the life out of you or whatever. But you do have a ticking time bomb with the neutral. This is the downside of a neutral, is that an explosion is imminent, meaning you're going to explode into a bull run or you're going to explode downward into a bear run. So, yeah, it's at the crossroads, man. Despite whatever the announcement is, this one looks like it may crash and burn. So just be prepared. Now I know what you're gonna say, but yo, Algo, what about this bullish pointer way back here? What about this way back yonder? What about this one right here on February the 22nd? What about this one? Well, that is a bullish pointer. I cannot argue with you. It is a bullish pointer, and yes, I believe at some point the market is going to be attracted to said pointer. But until the meantime, in between time, this is where we at. Okay, this is where we at. So until this changes, nothing changes. All right, let's take a look at the next one. All right, the next one that we have that is reporting is Apple. Let's take a look at the Apple. Take a bite out of the Apple. All right, so the Apple is in a bullish pattern right now. However, the bears are in complete control of this market because they're not letting it rally. All right, the bears haven't been able to get it to fall, but they're not able to make it rally either. They've just been kind of holding the prices at bay. And yes, we've been in a short-term top since way back here, in January's cycle. So yeah, the market has been coming off for quite some time. But if we switch it over to the weekly chart, all right, a little bit of a different story. The weekly chart is suggesting that Apple is wide open and ready to rally. All right. The bulls have been in control of the market since this little pullback test of trendline support. The test was successful, and the market has since rallied and got enough pressure behind it to overcome the overhead resistance. So the weekly chart is suggesting to me that not only are the bulls back in control of the Apple market, but that the market wants to come and take out this weak high. This is a weak high. I think Apple is poised to take it out. It's looking like it wants to do it. Like the character from Mad TV. He looking like a man. This looking like it's going to rally and take this out. All right. This is where we are. So I would say that it looks like about at least $1.50 is in play for Apple. All right. So that's going to give you a good $15 to $20 run here in Apple. I think it's good for it. PulseWave subscribers, you know what to do. Just go ahead and peep this in the dashboard and follow forthwith. All right, next up, who else is on the chopping block today on the earnings? Okay, we got Boeing. All right, so here's your Boeing. All right, on the daily chart, you can see we put in a high way back here. All right. We got kind of a bullish pointer here, and this also will be a weak bullish pointer. But then you got a nice little technical bounce off the lows to put price action right back above trend line resistance, which has now come back to trend line support. You're still in the Kumo cloud, and you still got strong, powerful overhead resistance at the top of the Kumo cloud. That is what the daily chart is showing us, and it shows that the bulls are in control of Boeing for the time being. But if we switch over, before I switch over, you see we're in a neutral zone as well, so that's why you're not really rallying. All right, you're bouncing, but you're not really rallying. You're not trending. All right, so but breakout or breakdown is imminent. Let's take a look at the weekly. See if we can gather anything else here. What else can we glean? All right, so on the weekly, we have right now, if today was Friday, we would have a bona fide rally alert for Monday. But because this is Wednesday, right, this is still the weekly chart. So this is not done yet. As of right now, it's looking like we want to get a power up. All right, it's looking like that for right now. This bar is not completed yet. This is just showing you what we're looking at right now. The last time we had such a thing, we had a false breakout, market pulled back. So now I guess the second time is the charm, but you still got powerful overhead resistance. So on the weekly chart, we are in a full-blown, correction and have been, right? So this one is in a bullish cycle on the weekly, believe it or not. All right, it's taking a look at these money flows and positions, and you can't tell just by looking at the chart. That's why I like the algo charts. Algo charts are able to do a lot more than just your normal charts that you get at your broker. So we're showing money supporting the market here. All right, so next up we got forward. Remember, forward used to stand for fix or repair daily. All right, well, here's what forward has done. So as you can see, we had this nice little run up, right? Every pullback test of trend line support was successful. Then all of a sudden, we broke with tradition on March the 25th and got a little bit too close to that trend line support, right? Then we kind of petered out here, got that crash alert sell signal, and the market fell down pretty hard. Broke with tradition, took out the trend line support right here, and even closed. We had a day where we closed below the trend line support. That hadn't happened since January the 4th of 2021 when we closed below trend line support. All right, so that was kind of scary. But then the market did something else. It closed below trend line support again. Now we got this rally alert buy signal, and then on the next day the market did succeed. It rallied, gave us upside production, and we've been getting upside production ever since and not looking back. Now today is the big test because you're right here at resistance. You're right here at resistance. The market closed right at the resistance mark. It paid respect to the resistance mark. Not to mention, you also have this top of the Kumo cloud. So you have a range now, a range of resistance from where we closed yesterday to the top of the Kumo cloud. That is a powerful vacuum there, air pocket of resistance that is threatening to keep this market at bay and keep it from coming out here and taking out the bullish pointer from March the 15th of 2021. So right now on the daily chart, bulls are in control of this market. We're getting upside production from the past rally alert buy signal here. But if we switch it over to but we're in a neutral zone, right? So time bomb ticking. Either we're going to fail up here in the resistance zone, right, and roll over and fall out of the Kumo cloud, or it's going to punch through and we're going to just break out and take out the weak resistance point back here and head up toward $14, $15 a share. But let's switch over to the weekly and see what we got here, what we can glean from here. Okay, so on the weekly, it's a little trickier. We got Tricky Ricky on the weekly chart here for Ford Motor Company. How is that? Well, if you take a look here, you see this bearish pointer. This is a supreme bearish pointer, supreme pointer. So what this is telling us is that this overhead resistance zone is solid. All right, and that this right here is a true top. That's what this bearish pointer is suggesting, that the market is going to fail up here, even if it does take out this resistance on an intraday spike, that it's destined, doomed to fail, and we're going to come back down here and test this trend line support, because this bearish pointer is going to have to be reconciled at some point. All right, bullish and bearish pointers are like gaps. They have to be reconciled at some point. All right, so this we know the market's going to pull back here, possibly south of 11 bucks. All right, so we got to take a look at that. This is where you are, ladies and gentlemen. You cannot ignore the algo charts. All right, those PulseWave subscribers out there, you know what I mean. You got your dashboard, peep the dashboard, and you'll see what I'm talking about on how to play this. All right, last but not least, on the earnings, we got the infamous Facebook. All right, so here's Facebook. We're bullish in the Facebook. Got that bullish momentum going on despite the pullback. All right, the pullback did become a full-blown correction. We have been in a full-blown correction since April the 14th, right? All right, even though we've bounced technically from the support, we're not out of the woods. All right, still in a corrective zone, even though we got that bullish complexion. From the rally alert buy signal we had here, we've gotten upside production. The market has maintained at this point. All right, so even though we got the bullish configuration, we don't know if the market's going to get enough energy and momentum behind it to take out the overhead resistance. This is not a bullish pointer. Therefore, we have to assume that this is a solidified top, market top in Facebook. We have seen the top, according to what we're looking at here. For the time being, we have a bona fide market top in Facebook. All right. If you are long in Facebook, you need to trade and tread accordingly. All right. Just saying. Anything can happen. As we know, nothing is 100% etched and written in stone. Anything can happen. All right. What I am saying is, barring any severe unforeseen event, all right, because we don't know what we don't know. The unknown is called the unknown because it's unknown. Barring some fantastic unknown event, this is headed south. At some point, it looks like the bulls are going to end up losing this battle, and we're going to come back down. We do have evidence to suggest that that is correct, because if you take a look, the last several attempts have each ended in failure at some point. Back here, nice explosive rally. We got nice upside production, but it failed. The bears came in and smacked it down severely. One more again, the market tried to rally, got that upside production. The bears come in and smacked it way back down again. Then we finally got we had a false takeoff. Then we had a bona fide takeoff. One more time, the market's exploding, took out all the prior attempt failures, made it look, real, made it look like it was legit, only for the bears to come in and sell it off hard one more time. Second time's the charm, come in, take out that last one and say, nope, this is a real bull market, ladies and gentlemen. only for the bears to come in and punish it again. Ladies and gentlemen, I'm just saying, it's not looking like a long-term sustainable situation. If something fantastic happens and we get that momentum into this market and it explodes, and we do have the bullish weekly trend momentum reading right here, then you're going to see 320. All right, so I'm putting all the cards on the table. According to the daily momentum chart, according to the daily algo chart, you're looking at a potential of 320 topside in Facebook. Facebook has been a gremlin and has done crazy things before, so we can't 100% rule it out. But I am telling you, this looks like a bona fide top. It just does. Let's switch over to the weekly and see if we can gather and glean a little bit more. Okay, so this is this week's bar has not concluded yet. If this was Friday, I would say you have a rally alert for next week, but because this is not finished, we don't know what it's going to end up looking like. We came into this week under the auspices of a crash alert. Here's that crash alert on the weekly. Here's the downside production. And then here we are right now at this point. All right. So the weekly chart is bullish too. Everything is bullish. Everything is all systems go. All right. So this one is, I'm going to chalk this up to a crossroad event as well. Again, this is on the dashboard. You know, follow the dashboard, follow the report. You know, regardless of what I'm saying, just follow the report. You'll be all right. Never take what I say over what is on the dashboard. Always follow the report regardless of what I say in these videos. I cannot stress that enough. All right. I've taken all of my experience and knowledge and put it into the algos for a reason. All right. I'm getting older. I can't remember every possible trick and nook and cranny. All right. I have a hard time remembering what I ate for breakfast. So that's why we got the PulseWaves. The PulseWaves is doing all the heavy lifting for me because it's going to recall things that I have since long forgotten or maybe overlooked. Maybe I'm tired. Maybe I'm sleepy. Maybe I'm distracted. You never know. That's why, you know, discretionary trading is dead. It's been dead for a long time. That's why more people are leaning toward automation. That's Facebook. All right, let's take a look at a few cryptos and then we will move on. Here is Litecoin. All right, so we came into today with a rally alert. We got that upside production and it's looking good. All right, so this is where we are. We'll see if it can maintain and hold it and sustain. If it can't, well, you know what to do then too. Here's the weekly on it. All right, this is this week, so it's not finished done yet. But as you can see, we came in with a crash alert. We did get a continuation downside production before the reversal. All right, next up is the Theta. Let's go ahead and see if I can. Some of these weeklies may not work. I'm hoping it does. All right, yep, this is one of them. So it's jacked up on the weekly, so I got to go back to the daily. All right, so here is your Theta. We're in the neutral zone. We came in to it with the rally alert, got the upside production. How much more overhead momentum can be gathered? It's a big question mark. Here is the resistance area. It has a little bit more room it can run before that. Okay. I believe that this trading range right here is going to be the established trading range for the foreseeable future. All right. And that is the trading range that was established on April the 18th. The last time we established a trading range like this was back here on March the 24th. And you can see how long the price action stayed within the respected zone. All right. For some odd reason, cryptos like to zone a lot. All right. So now this is your second zone. This is your primary zone. This is your secondary zone. And this is where the price action is. Normally, you won't get more than 50% or on the Fibonacci level, 61.8, 62% retracement of the resistance mean reversal off of the support. And that's kind of what you see going on here. All right. The market respects the Fibonacci when you're trading in the range zone. And that's what's happening here. Markets respect it. All right. Same thing here. You haven't been anywhere near that. This one's stuck at the 50% marker. See what I'm saying? So this is where we are here on theta. All right. We're trading in the zone. You're neutral. You're not trending. All right. Next up is XRP Ripple. Here's your Ripple. Okay. So you had that rally alert off the support, got that upside initial production. And this one here, as you can see, is in a bullish zone, meaning that it can break out and trend and rally at any moment, despite the official correction. Will it have enough momentum is the question. Are people just going to, wash their hands of it and move on to another crypto, or are they going to really put money behind this and cause it to push? So far, you're in the zone. Here it is right here, and this is what's happening. Market is respecting the zone. We'll see what happens because it did kind of it got a little bit further than what it normally would here, but then it just immediately pulled back, stretched the zone out, and then came back into alignment again. So XRP Ripple doesn't know what it wants to do right now. It doesn't know what it wants to be when it grows up at this point in time. All right, what about all the craze with Doji? Well, here you go. As you can see, it has calmed down a lot. All right, so you topped out here, and then you established a sideways zone. Market is respecting the zone, but it's hanging out at the bottom of the zone. You had the rally alert, but you got no upside production. So this one is a little bit weaker at this time, okay? This is a lot weaker, all right? Crazy weak, okay? Crazy weak. I don't know if it can get enough strength behind it. Ignore the gap. The gap is not real. All right, so this is where we are. We're right here. This is the zone right here from the April 20th. This is where we are. Not going anywhere. All right, the hype may be over. I don't know. You're in an official correction in Doji. All right, so till the correction's over, it's not going to stop. It's just going to do what it do. Next up here we got is DOT. All right, so we're in official correction zone on the DOT as well. Took out trend line support, which you're really not supposed to do in a healthy bull market. But this one, it's new-ish, so you got to give it time to mature. All right, and we had the rally alert, got the initial upside production, but had a hard time inside of this Kumo cloud, breaking out at the top of the cloud. It has room to run. All right, we're not going to disrespect it. It can get up to the $38, $39 handle. That shouldn't be too much of a problem, right? But we are under a correction, so I think what's really happening is the market's just moving back into alignment and trading again within the zone. This is the zone right here established April 18th. This is your zone. Market ain't going nowhere. All right, market ain't going nowhere. It's going to trade in this zone for the time being. So you got to get used to that. I know a lot of this is new to you guys. Some of you probably been trading 20 years, and the stuff I'm talking may sound like gibberish or Chinese arithmetic, but it is what it is. All right. I didn't make this stuff up. The market did. I'm just explaining to you what the markets are doing. That's it. I ain't make none of this up. All right. Next up, we got Ethereum. So Ethereum, though, has been on a tear here. It's been in the bullish zone, and it's been milking it for all it's worth. Yeah, you had a little bit of pullbacks along the way. Then you even had a correction. You went into full-blown correction, but the bulls didn't let the market really go anywhere. Created a zone and then just stayed in it. And then the bull said, oh, no, we're out of here. Boom. He even created a bullish pointer and pulled back from it, then took it out with the rally alert buy signal. So Ethereum is showing off. It's trying to do what it do. It's saying it has no slowdown in its game right now. So the only one that's looking really strong and powerful right now is the Ethereum. So this one is doing what it's doing. Last but not least is Bitcoin, the mighty Bitcoin. Let's take a look at the mighty Bitcoin. We're in a neutral zone, ladies and gentlemen. We're in a neutral zone where this thing can fall off the cliff and roll over, or it can explode back up to 65. Are you ready for what I am about to reveal to you about Bitcoin? If you are with me, let me see. We gotta get these likes up. All right, we gotta get these likes up. See if we can get these likes up. Go ahead and smash that like button. If you are getting something out of these PulseWave streams that I'm doing, then go ahead and smash that like button. All right, smash it, smash it, smash it. All right, Bitcoin. What am I about to say in Bitcoin? Well, we're in the neutral zone. As you can see, it was on a tear. It was in a bullish zone, and it just held it down for a long time. Now we enter the bullish zone. Yeah, ADA is ADA Cardano in the live. Yes, ADA Cardano, the crypto. What my main man Frank is telling you guys in the live is that tomorrow we have a big ADA event that's going to be going on, and we'll hit you with more about that later. If you go to PulseWaveTrading.com, I think he may have put it up already. For those post waivers out there, you may have seen it already in your dashboard or got an email alert or something. But it is an interesting thing. All right. I have some bad news to tell you about Bitcoin. Remember, I'm the Bitcoin bandit. When I first warned people about Bitcoin, when it hit 20,000, I said, you guys need to take money off the table. I said, you need to take some profits or at least tighten up on your stops. This is a huge run. Don't play yourself. Please listen to me. I pleaded and begged people to listen. Some listened and they walked away happy. The others that didn't had to sit and grind and watch Bitcoin crash from 20,000 to 3,000 right in the blink of an eye, erasing all of their hopes and dreams because they didn't listen. I told you need to go to PulseWaveTrading.com and sign up for the PulseWave reports and stop playing with me. Well, I have more bad news. More bad news. This news is going to be worse than any news you've heard from me before with Bitcoin. You're not going to like it. Are you ready? Bitcoin is going to the moon. Told you it was bad news, but I didn't say who the bad news was for. This is bad news for bears. Remember the old movie, The Bad News Bears? Well, this is bad news, baby. Bitcoin, you have not seen the highs in Bitcoin. According to the algo chart, this is not a bona fide top. I repeat, 65,000 was not a bona fide top. 65,000 was not a bona fide top. 65,000 was not a bona fide top. Even if we fall further, even in this neutral, if we explode and break down and fall out of bed, 65,000 is not the top. 65,000 is not the top. 65,000 is not the top. All right? That is not a topping pattern. Some will probably argue, say, yes, it is. Because then you started here, you went sideways, and you little top, you put, this is like a big old flat top, and flat tops bring market drops. You're right. I'll give you that. But you ever heard of a 3 or 4 headed individual? Nah, this ain't it. This is temporary pullback. See the rally alert? We got the upside production. All right. This is what it is. Can we run into a brick wall up here around 58,000, 59? Yeah, we could. Do we have an extended bearish weekly trend momentum reading right here? Yeah, we do. We do. But I'm here to tell you that it's not over yet. It is not over. It is not over. It is not over. Okay? You don't have to agree with me. You don't have to like it, but facts are facts. I do not have a top for Bitcoin. I know people are saying, oh, it's going to 100,000. Oh, it's going to 1,000,000. Oh, it's going to 1,000,000,000. It's going to 1,000,000,000,000. It's going to quadrillion. It may hit all of those targets, no matter how unreasonable it sounds. See, people need to get out of their foolishness when it comes to the markets. You think that the market is a human being and that the market is a rational being. The market is neither human nor rational. When have you ever seen the market be rational? When have you ever seen the market be reasonable? The market is a jerk. You need to understand that. You need to have a healthy respect, not fear, for the market. The market is a bully. The market is a jerk. The market wants to hurt as many people as possible. That's why you get false breakouts and false breakdowns. And it will do it over and over and over again, hoping to capture as many people as possible. All right? You need to understand that the market is a grim reaper. It doesn't love you. It doesn't care about you. It doesn't care about your circumstances. It doesn't care about your family. It doesn't care about your job situation, whether you're employed, unemployed, underemployed. It doesn't care if you're ill. It doesn't care if you're dying of cancer. It doesn't care if you got hit by a bus. All right? The market is not a human being. It doesn't have a soul. It doesn't have a personality. It's just a big jerk, a giant skeleton cloaked in a robe with a hood and a giant sickle in his hand, looking to reap as many trading accounts and wallets as possible. Okay? Always remember that. The market will do what it will do. And it is trying to harm you. Always remember that. If you go into that mindset, you will always come out ahead because you understand things that most people don't. All right. For the longest time, we had to listen to the annoying chatter of the mainstream media saying that cryptos and Bitcoin is only for criminals and people doing nefarious activities and for terrorists. It's not real money. It's not a coin. It's not legal tender. It's not a currency. It's not a financial instrument. It's not an investment. It doesn't have fungibility. It doesn't have tangibility. Illity, la, 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 blah, blah, blah. Had to listen to that for years. Now, all of a sudden, everybody is getting into the game. Everybody's buying Bitcoin. CEOs are buying Bitcoin. Entertainment icons are buying Bitcoin. Ronald Reagan rose from the dead only to open up an account to buy some Bitcoin. That's what we got to do. That's what we're hearing now. That's what we're hearing now. Yo, did you see that live stream with Nancy Reagan and Ronald Reagan? Yeah, they saying, yeah, man, you gotta get into this Bitcoin, man. Yeah, and then Thomas Jefferson, he came back, him and George Washington, and they did a live stream saying, yeah, man, I think we should change, the dollar bill and take our faces off of it and put Bitcoin on it. Whatever. There is no top in Bitcoin. Bitcoin does not have a ceiling at this time. Maybe one day it will, but as of right now, it does not have a ceiling. 65,000 is not a hard top. I am so sorry to have to break and bust your bubble. It is not a hard top. Can it end up being a top? Can the market roll over and disrespect everybody tonight and fall to 35,000? Yeah. It can even fall to zero. You need to understand that, ladies and gentlemen. Your logic doesn't apply in the market. The market is an irrational force. Now, some will argue with me and say, you know what? The market is human because it's made up of human beings. Well, again, If we use that logic, then you also have to agree then that there are human beings that are totally evil. There are human beings that are narcissistic and sociopathic and psychopathic. There you have it. The market is a narcissistic, sociopathic psychopath that gets off on your harm. You think you do? Oh no, that stock will never go to zero. You understand, man? This will never happen. I had to listen to that all my life. Oh, you don't understand. This will never happen. Oh, whatever. I had to listen to that forever. Forever. Don't say what the market can or won't do. Stocks can and do often go to zero. A forex pair can move more than 50,000 pips in the matter of minutes because it's happened before. The Dow can plunge 3,000 points because it's happened before. Do not say what a market can or cannot do. Likewise, don't ever say that how high something can go. You don't know. There's no limit. Did you know that? There's no law. There's no legislation. There's no bill. Okay? There's no amendment. There's no constitutional amendment. There's no unspoken rule. There's no street code. Nothing that says that a stock can't go to $1 million a share. That says that Bitcoin can't go to $1 million. They're saying that Apple can't one day go to zero and Google go to zero. Don't you ever say what can't happen. Don't ever say that. What can't happen. We're talking about a market. Markets can be irrational longer than you can remain solvent. Don't you ever forget that. All right? I'm off this now. I just had to stress this to you guys. Trade what you see, not what you think. You don't have to like something. Enron was a fake company that had fake non-existent profits. But at some point, the market did rally. Enron went high, and then it was brought low. Don't say what can't happen. Just saying. All right, next topic. Someone in the trading room hit me up with a question. Now, I hadn't gotten this question often, but I felt I needed to talk about it. So we're going to talk about it. The question that came in the trading room was, what is my opinion? Well, let's pause. I see one of my trading room people. Okay, all right. Let me do this. Let me hook somebody up real quick, and then we'll get into that. Let me hold that thought for a second. Let me hook up one of our people, and then we will get right into it. All right, hold on. Let me pull it up for you, my man. All right. Okay, you want to see the euro. Okay. So here's your euro dollar. We had this crash alert sell signal coming into the week. We got a little bit of downside production, and now we're just waiting to see where it's going to go from here. It has technically left the neutral zone and went into the bullish zone. As long as it can stay out of the Kumo cloud, then we should be all right. Let's take a look at the weekly. On the weekly, though, it's suggesting, so far, it's suggesting that the correction is over, and that now the market is ready to start rallying again. Okay, it's looking like it wants to start running again. Now this is this week's bar. It's not over with yet, but if this was Friday, I would say look out, because Monday we going hit. We going real high. Okay. All right. Okay. So this is it. All right. So this is what we are. You ain't gotta like it, but you do have to deal with it. Okay. All right. So this is your euro dollar. So there we go. Sorry, I almost forgot about it. So I had to do that. All right. Okay. Let's see here. What was I gonna say? Oh, okay. let me get out of this because now it's time to get into our topic. Believe it or not, we have not gotten to the topic yet. Today, what I wanted to do was make up for last night because I couldn't do the end of day report. So I wanted to go ahead and give y'all some chart work before we got into today's topic. All right, so the question that came into the trading room was, Dex, what do you think about bots? Trading with bots, automated trading. Okay. Well, the truth of the matter is that trading with bots, automated trading, is technically a new-ish creature. It's only been around for about 10 years, so it's new-ish. All right, hold on one second. Okay, so as I was saying, automated trading bots. Okay, so it's a relatively new animal as far as to take mainstream attention. So in the last 10 years, in the last decade, it's been pushed, forward a little bit more to the mainstream. However, the automated trading has been around since the early 2000s. It's just that it was more so on an institutional level. It wasn't really taking mainstream retail trading. The thing that's made the bots really popularized now is because of the whole crypto thing. Because cryptos have exploded onto the scene, now it's making it fashionable to trade and use bots. Okay, so that's what that is. What do we mean when we say trading with bots? What is a bot? Okay, so basically, a bot is a way to automate one's trading. There are different types of automation, and there are many different platforms and software programs that exist, more than I can even name here. All right. I've never really gotten into it because I only trust my computer to crunch data for me. I don't trust my computer to actually go in and trade for me. I'm sorry. Now, I know the arguments, those that love it and use it and swear by it. I understand. I get it. And I'm not knocking it. For some people, if that works, for whatever, I am a proponent of whatever works for you. Okay? If trading on a laptop while you ride on the back of an elephant is what works for you, then go do it. All right? Or whatever works for you, I'm happy for you. But for me, I don't trust the computer like that. Because we live in an age now where computers can be hacked, software can be hacked, hardware can be hacked. Okay? And what happens if someone, were to get in there and cause something nefarious to happen and you're not anywhere near there? Well, if you're not around the computer, you could get smoked. Even if you are sitting in front of the computer, you could be logged out or blocked out from getting in there and you get smoked. The system could have a hiccup and keep buying when it should be selling, or selling what it should be buying, or on the sidelines doing nothing when it should, like it's supposed to do. There is a chance that a computer will do what it's not supposed to do. Bugs can happen. Viruses can happen. And that can you imagine if you were using traded automation trading on May the 6th of 2010? You would have been smoked, bankrupt, done. Okay? So it has its limitations and should never be entered into lightly, because you're asking a computer program that you didn't program to do something for you that you are either unwilling to do yourself because of laziness or because you have a busy career, work, whatever. I get it. There are different types of automations and different types of programs. Several years ago, TD Ameritrade had one, Thinkorswim had one, where you could code and program your own system strategy, and the thing would actually execute those trades for you, put your stops in for you, the whole nine. All right, but there was a learning curve. You had to learn their computer language, and you had to go in there and you had to, bang it out. So there's always been a learning curve to those type of platforms. There were companies like Ninja Trader and things like that where you could use it with several different brokers, and you could program it, and it could do things that your broker may not be able to do. If my memory serves me correctly, I know at one point, I think, like, let's say your broker didn't allow you to use stop orders or whatever, the Ninja would do it for you, and it would do something. It was some kind of hookup. All I know is you had a system like that where it would do these things for you, and it could automate your trades for you. But in the crypto space, we have automation too. And an automation in crypto space normally takes one of two roles. Either you're doing something like dollar cost averaging, where the system will buy under certain parameters for you as the price falls and drops. And then the other one is where you can go in and set parameters yourself and tell it, I want you to buy here and sell there. I only want to risk this amount of money. If it hits this stop, if it hits this threshold, stop me out of the market, blah, blah, blah. Same principle as the Thinkorswim TD Ameritrade. Same kind of principle as the Ninja Trader, basically. It's still automation. You're saying instead of dollar cost averaging, instead of martingale theorying me, that's where you double down. You're using and controlling your parameters, okay? The dollar cost averaging, I always liken it akin to the martingale theory. Martingale is a betting theory where you double down, and there's a formula to it. Okay, if I'm down by this much, okay, and then buy. It's like, all right, for instance, buy me Facebook at $100 a share. Okay, if Facebook drops to 95, buy me another $100, 100 shares. If it drops to $90, buy me 200 shares. If it drops to 85, buy me 300 shares. And if it drops to 80, max me out, buy me 500 shares, and then stop. And then we'll put a stop at, let's say, 75. Okay? What you're hoping is that, in theory, the market is going to bounce back like a spring, like a rubber band, back up to that $100 mark. All you would need is for the market to get back up to the $100 mark. You don't need it to go beyond that. If it does, that's great, but you're only looking for it to get back up to the $100 mark, and then you make a killing. All right. That is the pro. The pros with martingale theory, gambling, betting, whatever you want to say it, using that for trading, and using dollar cost averaging, which is technically the same thing. What you're hoping in both scenarios is that the market will rubber band back. After it stretches itself out, it will rubber band itself back. That's what you're hoping. All right? That is the pro. Now, if it does that, if the market does that, if the conditions exist that will allow the market to do that, you make a killing. Those are the pros. Does it work? Does dollar cost averaging in martingale theory work? That is the wrong question. The question is not, does it work? The question is, can it work? The answer to that question is yes. Yes, there are market conditions that exist that will allow dollar cost averaging to play out for you and win for you. There are market conditions that can exist that will allow the martingale theory to work for you as well. All right. Those conditions are repetitive and they do exist, and they can exist and will continue to exist. Those are the pros. The cons is this, and this is a big con to dollar cost averaging and to using martingale in your trading. The con is that this only works, both of these conditions only work in a sideways market. And when I mean sideways market, I mean a perpetual sideways market. All right? A market that is just sideways, consolidated, congested, ain't going nowhere. Then that'll work for you. Because if the market is trading in this range, in this zone, and it's not going anywhere, then the dollar cost averaging, the martingale, can work for you. Martingale, though, branches off away and diverges away from the dollar cost averaging in that the martingale only works in sideways consolidated markets. When and if the condition changes, your martingale will break down exponentially and cause you to what we call blow up. You will blow up your account if you're not careful. Dollar cost averaging diverges from martingale because in a sideways market, you're not really experiencing anything detrimental with your dollar cost averaging, but you're not making anything either. The thing that works for the dollar cost averaging is in trending markets. All right, in a perpetual bull market, dollar cost averaging would work for you in just about any scenario. Like even with Bitcoin, if Bitcoin is in a locked-in perpetual bull market, right, dollar cost averaging will work because every time the market pulls back, you will find yourself getting a little bit of that, even if it's not the exact bottom. You're getting some of that, and then when it springboards back up again to new highs, it takes you along with it. Okay, but the downside to that is, and the dollar cost averaging is, it causes you to buy on the way down. So you need for there to be a perpetual bull market in order for dollar cost averaging to work for you. The moment dollar cost averaging ceases to work is when the market ceases to be a perpetual bull market. Once you get yourself into a bear market, dollar cost averaging blows up like martingale will blow up. You blow up. And the only thing you have to hope for is that the market will springboard back at some point within your lifetime, within your by the time you need to get the money out for retirement or for whatever other purposes. So you have to take those two things into account. All right. So those are the pros and the cons. All right. For that. All right. Now, let's get more deep. When we talk about using, these bots, whether you're going to dollar cost average or you're going to use it and set your own parameters, you got to keep a few things in mind. When we talk about crypto, at least I haven't seen it yet. I'm sure it does exist somewhere. To my knowledge, they don't have one like Thinkorswim's TD Ameritrade has, where you can go in and program your own system and then have it trade for you that way. I think it's limited. You have to put in some parameters, and then it gives you a drop-down menu of what you can do or whatever. So it's limited in its scope. So using the bot that way will be limited in its scope. There is a way you can use the crypto bots, like KuCoin has one, where you can use it just like you would do for placing trades, basically, where you're saying, okay, I want to buy here and I'm going to put my stop there. The bot can do that for you, to my knowledge. But there's no difference between that and you putting the orders in yourself anyway. So you might as well just go ahead and put the orders in. I think, though, that the plus side for using the bot, though, if you're going to use it with the parameters, is I think it allows you to add your stop conditions once you're filled, where right now you can't. If you want to buy something on a stop, you have to wait to get filled before you can place your stop loss. And for a lot of people, They want to go to sleep at night. They don't want to have to stay up all night watching the market to see if they get filled so they can put a stop in because they don't want to wake up tomorrow morning wiped out. Well, there's a way around that. There's a way around that. Okay, here's the way around it. What you can do is you go ahead. This is what I do. And I showed you in, was it yesterday? I did a video for my pulse waivers and I uploaded it to the trading room, showing you how to move in a sideways consolidated market. One of the things that you do is you place your buy stop, but you place a sell stop simultaneously. So that way, if you get filled, that stop is already existing. It's already working in the market for you. You can go to sleep. If it gets triggered, then you're just out. Just that simple. Now, that's the plus side. There's always a plus and negative side to everything. The downside to that is, what if the market doesn't trigger your stop and it triggers your sell stop instead? I don't want to be short. I want to be long. Okay. Well, that is a downside risk, but the upside to that downside risk is that if the sell-off is, if it's going to be a sell-off, then you get in and you capture that accidentally, and then your buy stop is there to protect you if it snaps back. All right. So just FYI for you, the pros and the cons there on trading with bots. To me, it doesn't make sense. If I'm gonna put an order in, I might as well just go ahead and put my order in. It doesn't make any sense to put my order in the bot, because then that's just making more work for myself. I'm still doing the same thing. I'm a traditionalist when it comes to placing orders. I want to go in and put my orders in manually. All right, that's what I want to do. I do like the mechanisms that exist to allow you to place a stop along with your initial order. I love that. That's dope. I do that all day. But using automation for my trading, I don't think so. I don't think so. Now, I know some of you will argue and say, yeah, but if you ever want to be a hedge fund person or a CTA in the future, you're going to need to use that automation. Nope, I beg to differ. There are CTAs that move the way I move. Okay? You don't have to use automation. I don't care how much money you trade. Because once you get to the institutional level, they have tools for institutional clients that is not available to retails that you can use, and you can put in your orders where you can match your orders. So if you got, let's say you got a hedge fund or you're a CTA, you got, let's say you got 100 clients and they all have different account sizes. What you can do is one trade fits all, and they'll do that. So one trade is for all people. Yeah, it's pretty dope. And you get to use the effective margin of your assets in total. So it doesn't matter the size of each individual account. It's pretty dope that way. Yeah, it's pretty dope. So yeah, you don't have to worry about that. All right. So hopefully this has been very informative and you guys have gotten something out of it. So go ahead and smash that like button, man. Hook me up. Hook me up. And you're going to definitely want to check out the live event tomorrow. Okay. It's going to be dope. And if you go to PulseWaveTrading.com, I'm sure we have some information up there for you. My man Frank, who is working hard behind the scenes and is also with us in the live stream. What up, Fred? Definitely look out. We got some good things coming, man. We got some good things coming. I told you, man, you know this. When I'm in the lab, when Frank is in the lab, when we are in the lab, every time we emerge, we come out with something for you. That's just how we do. We're not in the lab for the sake of being in the lab. We cooking up something. We got something brewing. It's going to make your lives a lot easier and make your trading a lot easier as well. All right. So at the end of the day, you just need to know that is our reason for existence. Okay. We exist because we want to see everybody to be consistently profitable. At the end of the day, if you're not profitable, then nothing matters, right? Nothing else matters. All right. Nothing else matters unless you're profitable. So that's my goal, is to get everybody in the trading room consistently profitable using these pulse waves. That's what they're there for. They're tools to be used to their fullest potential. And I want you to reach your fullest potential as a trader. With that being said, smash the like button. You know what this is. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And don't forget the FOMC at 2 o'clock. I will not be doing a 2 o'clock FOMC today. And the reasons for that is because the past several FOMCs have been snooze fests, and the market has been ignoring it and not really moving at all. So I think the only thing that is going to be worthy, maybe, is the conference afterward. I think that's what people are really looking for, is the conference. And, you know, they're going to look to dissect the Fed speak. They're going to look for what the Fed says and what the Fed doesn't say, and how they say it, and body language. There's a whole discipline when it comes to Fed announcements, FOMC days, and Fed conferences. I kid you not. People have developed programs and artificial intelligence to literally break down the words and the language that the Fed chairman is using and how they're using it. And it looks for keywords and things of that nature. And some institutions actually have algorithms that will place trades based on keywords in the Fed. I kid you not. I'm not making this up. I'm not pulling it out of the sky. These are facts. All right. I've been in this business for a long time, and I've seen a lot of things, and I'm telling you that technology exists and people have been using it for a minute. If he says the word plunder or the word dove or the word whatever that keyword is, those bots will go in there and start trading. I kid you not. Sell everything. He said he ate ice cream today. Sell everything. The last time he said that, according to the statistics, he only mentioned ice cream 3 times in the last 50 years. And every time he did it, the market pulled back 50%. Sell everything. And you think I'm playing? You think I'm just being funny? I'm not. I'm dead serious. But the reason why we haven't had any really significant moves in the market like we used to back in the day is because the Fed speak has become even more sophisticated, to the point where they know that you're using those bots and they want to keep it the way it is. All right. So they don't want to roil the markets in any way, shape, or form. So they are very selective in their speech, and they make sure that they don't let anything slip. All right. Anything and everything they say, you need to understand, has already been pre-authorized by the powers that be and already vetted out. They already know what the market reaction will be based on whatever it is that they say. All right. Just saying. Okay. So as for me in my house, I am flat going into the market, going into the announcement today. Even though it's been a snooze fest, I'm not taking no chances. I'm flat. I am not long crypto. I am not, well, I'm holding crypto, but I don't have any open orders working. I have no orders working in any market, whether it be forex, crypto, equities, or futures. Not until after this conference is over. Sorry. It's just what it is. You can do what you want with your money, but with my own personal private money and client money, we chilling until after the announcement come out. Because like I told you, the times that we are in is so grievous and uncertain that you never know what they're going to say next or do next. All right. And you can't put anything past them. I don't trust them. I don't trust none of them. All right. And you shouldn't either. Not with your money on the line. Wait, let them dudes talk. Let them say what they're going to say, and then let the market react. Give it about an hour, and then you can go ahead and do what you do. Okay. You have plenty of time to get busy if the markets are going to move and do anything today. All right. With that being said, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Purged.